This morning's inflation numbers have metals lower. We've got silver down 3% and gold down 1.44% on the day, which is, pretty good sized sell-off for the metals. So we're going to talk a little bit about gold, silver. We'll also talk about the stock market, which is just modestly lower here today. But really, the key thing here is the strength in the US dollar following the producer price index that came out this morning. Let's talk about it and whether or not there are some opportunities here. Let's jump in. By the way, as we get started in this video, I do want to remind you that if you're interested, you can join our Discord channel for free. There's a link down below in the description to apply to join it. We've got a really great community around the Forex, futures, stocks, and options community. We got a little bit of everybody all in the A1 Trading Community Discord. So come join us if you have not already. There's a link in the description down below. We're sharing daily analysis inside of the group so that you can keep up to date with what we're watching in the markets. We also have a chat room and our trade alerts for VIP members. If that is something that you're interested in, the first link in the description will allow you to chat directly with a member of our support team who can set you up with access to the VIP section. So the dollar index is up a good bit here today, and there's a couple things that we've got to note in terms of dollar strength. First of all, we also saw the Swiss National Bank report that a bigger interest rate cut than what was expected. You can see the SNB, or Swiss National Bank's policy rate, was forecasted to be 0.75%, and what they actually did was jump from 1% down to 0.5%. So they cut by 50 basis points, which was a surprise, bigger than expected interest rate cut. And this has been a thing with the Swiss National Bank. They like to surprise everybody. Meanwhile, at the same time, the European Central Bank also cut their rates to the expected 3.15%, so a modest interest rate cut from the 3.4 they previously were at. And here's that producer price index number that I mentioned, which came in a little higher than expected. At the same time, unemployment claims also were a little bit weak here this morning, which got the market moving a little bit. Specifically because of that larger than expected rate cut, the dollar Swiss trade that I'm in is looking okay. I've got a long position on this one, which is working out well so far. This is one that I called inside of the Discord. I'm using a dollar cost averaging strategy on dollar Swiss franc, and with this nice pop here today, looks like I might get the opportunity to take some profits on this position. So following yesterday's CPI number, which had an uptick in inflation, the producer price index was a little bit more on the hot side and caused, again, the dollar index to move higher. Any uptick in inflation causes the dollar to actually rise because it means that the Fed may take it a little bit slower to cut interest rates. That's what the market is thinking, and that's why the dollar index is up a little bit more today. And that uptick in the dollar does seem to be putting some weight on the shoulders of gold, which is trading lower here today by 1.4%. which is nothing to scoff at. I mean, that's a pretty good sell-off in the price of gold, and a bit of a rejection at this level that we've been watching on the channel here recently, this 2700, 2720 range, where we've seen several times now some big selling coming into the picture each time we come in here. So again, what I've been looking for would have been a stronger breakout to the upside, in which case I would have looked for an opportunity to go long gold. Might still be that opportunity. We'll just have to see what price action does from here. Is this a true sell-off in which we go back and test this 2600 level, or is this just a brief intraday kind of pullback before we maybe take out those highs and continue the uptrend that we've seen recently in gold this year, really? I mean, this year, I mentioned this on stream today, but this has been one of the most remarkable trading years for gold that I've seen in my trading career, up over 30% so far year to date. And for the NASDAQ and the S&P 500, this morning's numbers were a little bit mixed, right? You had a higher than expected PPI number, but also unemployment claims were a little bit soft, which is a bit of a give and take. On one hand, the Fed wants to keep job market security as strong as possible, but they also don't want inflation to get too out of control. So kind of a give and take here this morning, and we see that reflected in the price action both back and forth. And Bitcoin is approaching 102,000 here, and if it closes today where it currently is, that would be an all-time closing high for Bitcoin, which has just been on a monumental rise here in the last several months. Really, really spectacular price action chart. And I also wanted to take a quick moment to mention today's video sponsor, 8cap. If you haven't checked out 8cap, 8cap is a great brokerage for those outside of the United States, and the cool thing is that we actually have have a sign up deposit bonus offer with ACAP, where if you deposit a certain amount or more, you can actually get a free copy of the Edge Finder with your deposit. So for more information, we'll leave a link down below in the description where you can find out more. So check out ACAP, again, a sponsor of the channel for the long term. So check them out. They're a great brokerage for those looking to trade CFDs, looking to trade Forex. You can trade all sorts of different things in one brokerage. And why not get a special free Edge Finder with your deposit? All the information can be found in the description down below. Or if you have further questions, you can chat with our support team using the first link in the description. I've pulled up this chart a lot recently. It's the put to call ratio. And if you're newer to my channel, you may not have seen this indicator before, but it's one that I really like to look at for index stuff. When everybody is buying calls, this chart is printing a low figure. When everybody's buying puts, which are bearish bets, everybody seems to, or this chart seems to go much higher. The reason I bring this up is that when we sort of ping pong along the bottom here, what that's telling you is that investors and traders are feeling very enthusiastic, optimistic about stocks. And that does not necessarily mean that the top is coming for stocks, but it does tell you where, again, the weighting of the sentiment is. Everybody seems right now to be on the bullish side of the stock market. And with the unstoppable rally in stocks here recently, that does make me a little bit nervous. I'm not necessarily looking for, opportunities to short this market or get super bearish or anything like that, because again, I think sentiment is a bit of a poor timing tool. Rather, I'm just looking for, more chances for pullbacks specifically, but also just waiting to not chase what I think a very crowded trade right now, which is long technology, long S&P, NASDAQ, and Bitcoin. I think there's a little bit of a frothiness to the market that I'm personally trying to just keep my eye off of, right? I'm just doing other things. I'm looking at gold. I'm looking at options trades that I've been doing. I've just been focused on currency pairs, right? I'm doing other things to keep myself distracted from what I think is a bit of a melt up move in the market that I think will have a corrective or breathe in, breathe out component to it. I think we're going to see some pullbacks at some point here, maybe in the turn of the new year, maybe before then. Not really sure and not trying to time a pullback, but I do think that a pullback is due for some of the indices, which I believe have been very crowded, very popular trades. I've got people literally sending me DMs. Nick, do I buy, the NASDAQ? Do I buy NVIDIA? And my personal opinion, you do what you want, but I'm not chasing these things. I'd like to wait for pullbacks, even if that means missing some of the move. The VIX is down another 1% here today, trading at 13.4. And I mentioned the VIX on today's live stream. In fact, I mentioned two charts that I think every trader should add to their watch list. Check out this segment from today's live show and make sure to add these charts to your watch list. Guys, volatility also, if you're a Forex trader, gold trader, index trader, doesn't matter. This chart should be on your watch list. This is the VIX. And it surprises me, not everybody knows about the VIX. I mean, the VIX is, to options traders out there, this is the holy grail, right? This is the dollar index for options traders, basically, right? Currency traders love looking at the dollar index. Index traders love looking at the S&P. Options traders love looking at the VIX. But every trader, there's two charts that I would ask you right now to add to your watch list if you don't have them already. You ready? Two charts, the VIX, and what do you think the other one is? Hint, it's not gold. The two charts that I would encourage you to add to your watch list are the VIX and the 10-year government bonds Treasury yield. These two charts, Raj gets it. This is it. This chart, so important. This chart, so important. If you walked into the stream today to say, I don't look at the VIX or the 10-year, I'm telling you, these are two of the most important charts in the financial markets. Doesn't matter what you trade. Both of them matter so much. Okay? Again, if you're a gold trader, it drives me crazy. Sometimes people say, I only trade gold and I only look at gold and I never look at anything else. It's like, okay, fine. Like, do your thing, but why are you watching the stream? We're talking about fundamental analysis here. We're talking about what really is moving the markets. And I'm telling you, the VIX and the 10-year Treasury yield, really important charts. I'll talk about both of them briefly. The VIX is important because it shows you, think of it as the fear and greed index in a chart. It's really important. When this thing is really low, what it basically telling you is that options traders who make up, there's a lot of volume in the financial markets that goes through options. Options traders are buying puts, they're buying calls, they're selling puts, they're selling calls. When the VIX is low, it's telling you that the market doesn't think there's going to be big moves. And when the VIX is high, it's telling you that the market thinks that the market's going to have big moves. And when I say market, I'm talking about specifically the S&P 500, right? Which is a good indicator of the risk on, risk off sentiment. When this thing is high, people are scared. People think there's going to be huge moves in the financial markets. And when it's low, people are cozy, comfortable, optimistic, think it's all going to be rosy. Right now, it's like that, right? Everybody thinks, it seems in the market's perspective, that everything is A-okay. Things are good, right? The economy's good. Fed's going to cut rates. Geopolitics are going to improve, etc. Outlook has really improved in the last, actually following the election. Now, I don't say that to say, oh, it's because Donald Trump won, that's why the world is going to be better. That's not what I'm saying. What I'm saying is that the election was a big uncertainty event. People were really uncertain of what was going to happen with the election. And then when that faded, now we've got this very low volatility environment where people feel, okay, we're pretty good. Stocks are going to likely move higher. Cryptocurrency's doing well because, again, the VIX is low. So when the VIX goes high, what you will say, I'll say this for the rest of my time as a trader, most people's strategies work really well in either one of these scenarios, and very few trading strategies, actually, I don't know of any trading strategies, work well in both. Whether you trade Forex, gold, doesn't matter. During this period of time, typically things trend slowly higher in the stock market universe, and currency pairs don't move very much, right? They do, but they don't move that much. When this period happens, stocks are usually cratering really fast. Crypto is cratering really fast. So if you're somebody right now and you're like, I'm making good money, I am riding the crypto bull, I am trading the indices long, and I'm making money, again, typically your strategy is going to work really well in a low VIX environment. If you're somebody who's doing terribly right now, you say, I need more volatility. I need big currency trends to take place. I need huge breakouts. I need gold to rip through the highs and make a more decisive move. Then you probably want the VIX to go higher, right? So my point is, nothing works all the time. This is why drawdown is inevitable. Nobody's trading strategy works all the time. You can have drawdowns and they can be ugly if you risk too much. VIX is really important. Add it to your watch list if you don't have it. I'm telling you, it's such an important chart. It'll add clarity to why the market's behaving a certain way. If you're like, I don't know why the market's acting weird, you may have gotten used to one environment and it switched, right? It's absolutely an important chart to add to your watch list, because again, people get really confused. I only look at one chart. Well, great. You're completely blindsided to what else is happening, what external forces are impacting your chart that you love looking at. So if you only look at gold, great. But you could get some really good insights by adding some watch list items to understand why gold may be behaving the way it has. Look at what you guys want to see, why the VIX matters to gold, for example. Look at this. Up, up, up and away, gold was going. And look at what the VIX was doing at that time. You had a pretty elevated VIX, right? August, huge spike up. You had a relative high VIX compared to recent times. Gold's been less decisive with this fall off in the VIX. Uncertainty is a factor that helps gold. So when the VIX is low and uncertainty is low, gold doesn't do as well. Usually, not always. Right? So that's my thought. I just wanted to share that with you. The VIX is a really important chart. I'm an options trader as well, so I use it all the time. I like when the VIX goes up as an options seller because I can sell things for high premium. I can sell calls, sell puts for high premium. When it's low, strategies that typically work better for me would be being long the indices and trend following stuff, right? So just wanted to share that. It's a really, really fun thing. The other chart that I mentioned is the 10-year Treasury yield. The reason this matters so much is this is the bond market trying to forecast what the Fed's going to do, typically, right? The 10-year Treasury yield is how much money, how much return you're going to get by lending the government in the US your money. How much do you get per year? You get 4.275%, which is arguably a pretty decent return for a passive, return, just investing your money. That's a lot higher than it used to be. It used to be much, much lower. You used to stick your money in a 10-year Treasury and get nothing. Now you get a decent 4%. Again, that's no effort, just 4% on your money, and you go on and do other things in your life. So my point is, when this rises a lot, that can tell you that people think inflation could be a problem. It tells you people think the Fed is going to keep rates higher for longer. And when it reverses, when it's going down, people think the economy might be cracking. The Fed may need to cut rates, right? So keep this also on your watch list. It is dramatically important for things like gold, things like currency traders, things like index traders. This chart is so important because the Fed matters so much to either putting the gas pedal or the brake pedal on the market. This is a good indicator of generally where they're going with that. I hope that was helpful to you. That's two charts that I think are really important to add to your watch list: the VIX and the 10-year Treasury. The symbols to add to your trading view or MetaTrader or whatever you use is VIX and US 10Y. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.